The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to a Bill in Boca Raton. Hey, Bill, what's going on?
Not too much. Enjoying the warm weather in Florida just like you, except on the other coast.
Perfect, man. Perfect.
Yep.
Do you listen on the internet right now?
Yes.
Cool, man. Cool.
No, I enjoy that. That's in your Tiger TV and everything. I've been watching you for years, and you've really taken this whole programming to a level that's just phenomenal.
I appreciate it.
And now, here's Tom O'Brien.
Well, welcome, folks. This is Tom O'Brien of TFNN. Well, 5 days a week, we go 2 hours a day, we go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Learn to ask questions. It is always better to ask questions. Sorry about that, folks. It's always better to ask questions than to make assumptions. Have the courage to ask questions until you're as clear as you can be. Once you hear the answer to the question, you won't have to make the assumption because you will know the truth. Market-wise, let's take a look at it out here. We had the Dow up 29, NASDAQ up 23, S&P's up 6, gold contract up $18.90, trading at $1,663. Gold went to all-time highs today. Silver up $1.63, trading out at $41.71. Copper down 5.5 pennies at $4.33 a pound. Late sweet crude off $1.94, trading out at $91.85. Bonds up 11 ticks at 131.05 after hitting 102 at 132. Dollar index down 48 ticks at 74.18. Euro up 11 at 143, and the yen down 15 at 77 flat. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at it. Let me tell you, folks, it's absolutely wild. So, cash S&P gets to 1234. 1234 goes right into the 1249 from March 16th. What does it do? Rejects the March 16th level. Does it with lighter volume. Just barely, by the way. Just barely. Bottom line, rejection of price. Has the lighter juice underneath it. And when we take the lighter volume, this is what you have happening here, folks. We did here 1.35 billion today. Now, that correlation, okay, just so you see this correlation, the correlation is 1.460. That correlation is telling you that you're still building cause to break these bottoms out. You know, my take is, yeah, we're long right now. We're going to go for a nice bounce. But the bottom line is that what we've had here is this. Each and every time we're down, you're coming down with monster volume. What we have in this particular case, flat out, is that you've had a market that was straight down from the acceleration from 1347. That's 100 S&P points. We're in a 112-point S&P range. Now I can make the deal that we're dealing with almost 125 S&P points, or 34, 44, 54, 64, 138 S&P points. That's heaven, folks. That's the bottom line. So when you get a rejection of lows like this, and you reject with lighter volume, what can you expect? Well, let's go to the SPY. We'll take a look at the SPY. What you have with the SPY is this. The SPY today did 360 million shares versus the 469. Now, that's a nice rejection, because what you have there, of course, is that you're talking about 100 million less. You're talking about 25%. That's a nice rejection. Contraction with volume after accelerating down in a big way. What that sets up is, when we take a look at these S&Ps, the SPY, that would set up not too hard to get into the 130.55 area. That 130.55 area brings you back to the 29th of July. That's your S&Ps. We go over to the Dow Industrials. What you have inside the Dow is this. Dow Industrials got down to a price point of 11,700, rejected that level, The lows on the Dow, by the way, was 11,555, so it didn't get there. Now, what the Dow did do is this, and this is important to understand. The Dow got into the highs of the low bar, rejected it with lighter volume. That's saying that the Dow is going to make its way all the way back to the 12,384. Trade is paradise, no doubt about it. This is high volatility, hitting swing points, markets talking, walking, and squawking in a big way. Now, NASDAQ, okay? What did the NASDAQ do? NASDAQ, folks, gets down to a price point of 26.21. We closed at 26.93. Huge rejection of price, and with lighter volume. What we did in the NASDAQ now, this is where it gets really dicey, and this is why. The NASDAQ came down and rejected with 2.594 billion versus 2.603. Now, what that says is that, number one, you're going to be back down there. But right now, NASDAQ wants a nice bounce. That bounce can get you somewhere into the 2,800 area. Okay, small caps. Now, when Steve and I were on this morning, and don't forget, folks, Steve Rhodes and myself, we do a program at 10 every morning. 10 to 11 Eastern Time. You can get us on Tiger TV, Channel 1. Of course, you can get us on TFNN.com, on the computer. You can get us in, if you have an Apple device, just go to the App Store. It's under TFNN, period. Just TFNN, the app's free. If you have any other type of mobile device, meaning a BlackBerry, an Android device, or a Microsoft device, in your browser, just put TFNN.mobi. Okay, so the Russell 2000, what did the Russell do? The Russell did a perfect butterfly, folks. The Russell broke out those bottoms. The bottoms that we're talking about was the 775.90, got down to the 750.06, rejected that level. And if we go over to the IWM, what you're going to see is that we rejected it with what? Heavier volume. We did volume of 111 million out here today versus 84 million versus the other swing point out here of 89 million. What that also sets up, folks, is what? Is you're going to be back down to those levels. But you know what? Not right now. What we're going to do first is that it's going to make its way all the way back up to this 81.91 if you're looking at the IWM. And bottom line, it's traders' paradise, no doubt. Volatility in spades. Today, the DAX, folks, okay, got absolutely smoked. The DAX in 3 days went from a price point out there of 73.82 down to 65.43, and then made its way back. The DAX wanted to reach. If you want to see how indices and equities want to reach for swing points, DAX did it in spades. It's pretty amazing, too, because the DAX was strong until that little flash crash that happened 2 days ago, and from that point on, big problems inside the DAX. Some of the high vol, there she is, 1 second, there she goes. Okay, bonds, let's go over to the bond market. This is what we had with bonds out here today. Bonds got to a price point of 132.08. You did 514,000. That was the end of an ABC structure on the way up. Now, what bonds are showing, this is what's going to get wild. Bonds want to pull back. These 30 years want to get back to the 127 area. But what bonds are showing, again, is that bonds want to trade higher. That's the way this is set up. You know, you'll get a pullback. I suspect you'll get back to that 127 area. We'll see how we come back there. That's where it wants to go at this particular point. But now what you have is that you have a high volume high. And if we bring this back and we put this on a continuous contract, what we have in a continuous contract is this. I'll bring this back to 03. We're going to put it on a weekly basis. And what you're going to see is this, is that the last high that was out there was going all the way back from August of 2010. That was 136.31. Now, the way this is set up is that after we get a pullback, bonds, pull back to 127. That next leg up in the bond market very well can bring you to 136. What do you want to correlate that with? What you want to be correlating that with, folks, is this. S&P-wise, to me, want to bounce in a big way. What you'll see as we bounce up to higher levels, you'll see the volume contract again. Then you'll see we start pulling back down to the lows again. And these lows, folks, want to be blown apart. That's the bottom line. Each low that we've hit, if we look at the S&P, I'll bring this back to 2010. This consolidation has been a monster, no doubt. The consolidation that I'm talking about, right now, you get 1260 S&P. 1260 S&P, number one, takes you right back to December 30th. And that consolidation, you know, you get 112 points. Well, you take 112 points, folks, away from the bottom of that consolidation, and what do you have, okay? That's going to basically say that what we're doing is we're building cars to get into the 1130 area. Now, the 1130 area, of course, brings you down quite a bit. The 1130 area will bring you all the way down to June of 2010. But what it also does is that it gives back some monster numbers. And there's not much in between where we are now and the level of about 1215. And each and every time, of course, that the market does get saved, it gives longer-term players more conviction that, hey, listen, I'm staying in this market. It's going to be dangerous to stay in this market, but it's going to give longer-term players another chance to get out. We'll see whether they decide to get out or not. Some of the high-volume stocks out here today, you have Bank of America up 5 cents. We had Intel up 30. Ford was down 20. We had Comcast up 4. You had Fifth Third Bank up 22. Marathon Oil was down 149. Let's go over first to the financials. We take a look at the financials. Financial structure out here today, we got to a price point of 14.13. Has some volume down there. Did reject it. Financials, they want to get into about the 14.81. We go to the XLE. We go to the energy sector out here. What we had with energy, looking at that XLE, she comes down on 35 million shares. Now, this one gets interesting. This is why. She's been in consolidation also. She came down with 35 million shares, going into 45 million. This little baby is going to walk its way right up back to the $77 level. If we bring this back to 2010 also, this also has been in a very large consolidation. This is building cause in order to break it also. And, you know, if you're watching this on Tiger TV, folks, you're going to see this is sticking out like a sore thumb. Each and every time that you start hammering bottoms out here, it is absolutely huge. And, of course, coming up next Monday, for all the folks that had bought those Tiger dollars in the month of July, we're going to have a field day Monday from 10 to 3. You know, basically going through how markets work, number one, setting up trades, number two, and seeing, because the volatility here, folks, okay, is as good as you get when you're in and out of markets. And, you know, you don't have to be in and out of markets on a 10-minute basis, but whether it's 3, 4, 5 days, it's there, and it's there in spades. This is Tom O'Brien. This is TFNN. You stay right there, folks. We have the Dow up 29, NASDAQ up 23, S&P's up 6. We're going to be right back.